Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, April 20th, 2009. We start with one of the few fundamental releases today, Australia's producer prices. Producer inflation cooled in the first quarter, declining 0.4%, a result that surprised forecasts. The annual rate also missed its expectation of a 4.9% increase. Lower producer prices will act to lower consumer inflation and also gives the RBA more leeway to cut rates if they feel it necessary. The Aussie-Yen pair saw a very sharp fall today as the pair broke out of a symmetrical triangle pattern on the downside. The weak producer price data weakened the Aussie as it opens up the door for more interest rate cuts by the RBA, but soon risk sentiment from equity markets took over, extending early losses into a plunge of nearly 370 pips from the session's open. The main indexes in Europe were down between 2.5% and 4% today, with banks leading the way down. The increase in risk aversion benefited the yen, which saw strong gains against its major rivals. The euro-yen pair broke below its short-term line of support from the latter half of last week and accelerated its downtrend in today's trading. The euro was off 330 pips from its open, testing support near 126.10 as U.S. stocks were battered to start the week as well. The euro-dollar pair fell as well, sliding below 1.29 and setting a one-month low. The pair is now at a level that undoes all of the dollar's losses following the announcement by the Fed that it would start buying treasuries last month. That had caused a sharp move in favor of the euro, but now with the Eurozone economy struggling and ECB officials split about the way forward, the euro has come under increased pressure in recent weeks. Today's 150 pip fall was similar to the move we saw on Friday. In the UK right move house price index increased 1.8% for the April period, the highest monthly increase since February of 2008. The decline in the annual rate slowed from 9.1% in March to show a less severe 7.3% decline. The data is a good sign for the UK economy as housing has been one of the major drags during this recession. The pound-dollar pair fell as a result of the increase in risk aversion. We mentioned on Friday how this pair was setting up in a head and shoulders pattern, and today saw about a 290 pip fall that stalled at the 145 level. That put the pair back to its lowest level since the beginning of the month. The pound-yen pair, which was trading for the most part in a range the last 2 weeks, broke support around the 145.80 level and plunged 500 pips from its open. The pound was pressured by bank shares falling, but also a report by the Confederation of British Industry that forecast that the UK economy will shrink more than expected this year. The dollar-yen pair, meanwhile, was about 150 pips lower from high to low, testing support at the 97.70 level. The decline here was smaller than the euro and pounds falls versus the yen, as they are not seen as safe havens at all, while the greenback still holds that distinction during these times. The three main U.S. equity indexes, the Dow, the Nasdaq, and the S&P 500, closed down between 3.5% and 4.3%. The U.S. dollar-Canadian dollar pair echoed risk sentiments as the greenback surged higher versus its Canadian counterpart on the back of falling stocks and oil prices. The pair climbed 250 pips, accelerating its breakout after getting past the 1.2175 level, which had acted as resistance last Wednesday and Friday. The Bank of Canada will be deciding on interest rates tomorrow, though with traders expecting the bank to stay at 0.5%, there may be an indication from policy members regarding their stance on starting quantitative easing. Tonight, the Reserve Bank of Australia will release its meeting minutes from its last surprise 25 basis point cut. Also, RBA Governor Stevens will be giving a speech as well following the decision. Overnight, Germany releases its producer prices and the ZEW Economic Sentiment Index, a measure of investor confidence in the economy. The UK, meanwhile, will post data on consumer inflation. Tomorrow, as we mentioned already, the Bank of Canada will conclude its interest rate meeting, while the country's Statistics Bureau will release data on wholesale sales. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.